in my career, I started on the entrepreneuring side and being basically an employee in startups. And then went from that on to sort of flipped across the table onto the venture capital side after a while. Well, I was a technical employee. I was a programmer and a computer guy, and in the first startups in Silicon Valley that I was involved in, I was technical, but then technical people were so scarce that you ended up getting sucked into marketing and sales because you were the only people who could tell people what the product did and show them what it did. And so then I did sales, and then I decided that, having been trained as an engineer, I didn't know enough about accounting or law or business generally to not be over my head in the sort of conversations you get in when you're in the top couple levels of a startup company. And so I left and went and did an MBA, and in the MBA I did finance because it was new and interesting to me. And then I went back as a VC in London. So my first job after the MBA was as a business strategist for a venture capital company in London. And the first business I looked at was a software business, and my advice was to do a lot of different things. And the people who had hired me said, well, if that's your advice, go do those things. So then I became the MD of this company and basically got a new version of the software out, kind of cleaned up the development process, got some documentation, got more marketing input, all the kinds of things that I thought were needed to make this company a success. Did another capital raising in London. Then I went over to Silicon Valley, and then I got back into venture capital when I went to Australia to do a PhD in finance, and got involved in writing software for economics and for banking. And then I became an investor in technology companies. So I worked for a bank, but my deal with the bank was, I'll set up your IT for trading, for tracking your trades, and they had billions of dollars all around the world in 20 currencies and 5 or 6 asset classes, and the system they had at the time could only tell them what their positions were as of the last month, 2 weeks after the last month had ended. And so they were at most 6 weeks behind, and at best 2 weeks behind. So I wrote a system that kept track of it minute by minute. But my deal was, I will do that, but what I want to do is become an investor. I wrote the software for the bank that kept track of their positions on a real-time basis. And my agreement with them was that after I did that, I would be a portfolio manager. So I began investing in companies on the stock exchange that were technology companies. And this was the time when Netscape floated. The internet had basically just appeared. I had just sold my ownership in the first .com company in Australia, the first ISP that I co-founded with some other people. And so this was where the action was. And I left the bank and took over a stock exchange listed company to be a technology venture capitalist, to be an incubator. And so in 3 years at that company, I looked at 1,000 business plans. I did due diligence on a couple of dozen of those business plans, negotiated on about a dozen, and closed 4 deals in the end. And of the 4 deals, 1 broke even, 1 did better than break even, 1 did spectacularly well, and 1 was a complete write-off. And that's better than average. On the odds on venture capital traditionally are 6 in 1,000 deals get funded, 4 of them go down, 1 of them breaks even, and 1 makes money. And that's the environment that venture capitalists operate in.
Looking back at those 4 companies, is there some lessons that you can learn in hindsight about what was the difference that made them more or less successful?
I think the one that went down was too early. It was an online game company, and we had the idea that people would want to play games against each other online. And and people were already getting together in high school gymnasiums and wiring all their computers together to play against each other. So we basically just took that, put it online. But it was too early. People weren't ready to subscribe to a service like that. We charged $10 a month, and the gamers thought that was just completely was crazy. And of course, not that many years later, World of Warcraft came along, and off we went. So our timing was wrong. We were too early. One of the also successful companies was really a manufacturing company and a fairly low margin, high volume business, and I think opportunistic. Not particularly, there was no strategic IP, there was no defendable competitive advantage there. It was just arbitraging temporarily a market where they could do quick turnaround and beat other people's prices on margins and so on. So that wasn't, in retrospect, that wasn't a very exciting business because it wasn't going to go anywhere. One of the businesses was one of those small companies like you have in New Zealand, but this was in Australia, who manufactured a particular piece of fairly high technology gear that was a world first and really special, really interesting and useful. They got a contract from a major American telecom equipment company, what they call a take-or-pay contract, which was the company would pay them the money whether they shipped the gear or not. So it was a guaranteed sale. And in the end, that company ended up breaking up, demerging, and we ended up just getting crossed off the list as something too small, and so they wrote us our check and said goodbye, and that was the end of it. There was no other way to get that product to market at a scale that was going to be profitable. So sold out of that investment at more or less break even. The investment that really did well was again an internet investment, and it was a service that I became used to in the US that didn't exist in Australia yet, and I didn't see any reason why it couldn't be done in Australia, and so it was an internet stockbroker. And so we started E-Trade. I went over to Silicon Valley, bought the rights, negotiated the licensing, and we created a broker, put it on the stock exchange, became a member of the stock exchange, and that did quite well. So here's the thing for people who want to do a startup, right? The first thing you need to know is you need different people involved and different kinds of people involved. When I look at startups as a VC or an angel investor, I want to see somebody who's going to deliver. Usually that's a technical person. I want to see somebody who's going to sell, and I want to see somebody who's going to keep track of where the money comes and goes. So that's sort of the basic team, and you can have variations around that, and sometimes one person can take two of those roles, but if you find one guy trying to do all three of those roles, it's going to be very, very hard. So I would say to technical people, scientists, engineers, make friends with some accountants, make friends with some lawyers, make friends with some marketing people, because those are all pieces of the equation, and you can't survive creating a solution in a vacuum. The other thing that I would say is I like people who start with the problem rather than starting with the solution. There are far too many, on the technical side particularly, coming out of scientists and engineers, there's far too many people with a solution in search of a problem, right? They found some new thing you can do with a material or a mechanism or an algorithm, and now they're trying to figure out how do we make money from this, right? That's, to me, the wrong end of things. What you want to do is look at what are the things that really annoy you in life? What are the things that are problems in the world? And then think about how you can bring your skills, what you know about, or even acquire the skills necessary to address that problem. Because you want to be in a position to sell people something that they already want and that they'll already pay for. You know, too much on the internet, people were trying to convince people that they wanted to pay for something they didn't already pay for. And I think that was the mistake with our game company. People weren't ready to pay for games. They played games for free. Why would they ever pay for games? On the other hand, the stockbroking company, people already paid brokerage. They were happy to pay brokerage, and there was a lot of money in brokerage. So if you could do that for them a little bit better, a little bit faster, a little bit less expensive, they're quite happy to write the check. Look for the problem first, then figure out how to fix it, and then worry about where the money will come from. Because getting the money out of it is often a lot more flexible than people think. And look at the way Google gets its money. In the end, Google gets its money from ads, right? But at the beginning, Google didn't even think of that. It wasn't until Yahoo bought Overture, which is the company that actually figured out how to auction keywords, that Google realized that there was a revenue stream there. They had already a product which they were providing, search, and it was a very good product. They were solving a problem, and they were solving, this is another thing to look for, you want to, in the model that you have, part of the model has to include people telling other people about what you do. There has to be a way to get other people involved. That's something that Facebook's done very, 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 very well. So you look for a gap in the world, something that could be better, something that's not quite right. You look for a fix, and then you look for a model. I like things simple, so I try and see that pattern when I'm looking at an investment. The reason venture capitalists are hard, and these guys are some of the toughest guys I've ever come across in the investing world. The good VCs in Silicon Valley chew nails. You know, they are really tough. But the reason that they're tough is they have to shut these businesses down. They're the ones responsible for the risk to their investors. The only way to make a return on the ones that make it is to shut down the ones that aren't going to make it, and that's a tough call. I mean, the toughest thing as a venture capitalist that I ever do is pull the plug on a dream. Because, you know, these people have bet their lives, they've got kids, they've got mortgages, they've taken big risks. Generally, they're young people, so they have time to recover. You know, that life is long, there's plenty of time to get back. And they gain a lot of valuable experience. But nonetheless, you know, when everybody's a believer, and everybody generally is in a startup or they wouldn't be there, it is a very hard thing to say, look, this one's not going to make the cut. Go out and get yourself a new project and start over. So how do you make this decision on when to cut, which one to cut? I think that comes from you always have a plan when you start, and usually the plan is built to mitigate the risk. The plan is built so that you incrementally invest as you reduce uncertainty in the business model. So maybe you have to make a particular robot work. Okay, so you put up just enough money to get to that milestone, and then you find out, you know, did we hit the target? Okay, now we're going to put some money into building a production plant or marketing this new service. We're going to do a launch. We're going to, so you'll always do your investment in stages, and at each stage you'll have milestones that you expect to achieve. And frankly, you've got to be honest about, you know, you either achieve them or you don't. There can be good reasons, and there can be bad reasons, but sometimes the market's just not there. It's a very difficult thing, you know. I remember we were running a software company. I was running a software company in Silicon Valley in the mid to late 80s, and we were spending a lot of money on marketing, and I had a model which showed for this amount of money on advertising, we would get these many leads. The leads would go to dealers. They would get this many sales, and so on. And then that would hit the cash flow, pay the salaries, debt, blah, blah, blah. So the whole business was on a model. And the whole business hinged on that response to the advertising. And we were spending $50,000 a month advertising, and you could see after 4, 5, 6 months, we were not getting that number, and if you didn't get that number, we were getting all the other conversions. So if you had 100 leads, 25 of them were buying from the dealer, and so on and so on. So all the way down the chain, the assumptions were correct and the conversions were correct, but that initial number wasn't right. We were not getting the leads we needed from the advertising money we were spending, so we cut it. But of course, that's also a decision basically we searched around for a while longer on how to achieve that goal through trade show exhibitions or direct mail or demo product that you can have a 30-day trial. I mean, there's lots of other ways to try and get that pipeline, people into that initial pipeline. But in fact, none of those panned out either. And so after $4.5 million in 3-4 years, the decision was made this wasn't going to happen, and closed it down. So drilling down further into that experience, it was the marketing that was wrong, that was missing. The sales were there. Once you had a conversation with somebody, they would buy the product. This product was project management software for engineers and civil engineers and aerospace, and a lot of different industries do project management, construction. But people generally didn't realize that they had a problem that we could solve, and the advertising that we were doing wasn't communicating that, wasn't getting them to that point. And so I guess I don't have anything more to say. I mean, it's still, to my mind, it's a mystery. There's this old adage that you waste half the money you spend on advertising, you just never know which half. Many people want to start a company, and I think the world needs people who want to approach problems in new ways and create new solutions. So that's a good thing. But in launching out to start a company, I think people generally don't understand that not as many people are as successful as the media would lead you to believe. You only see the winners of lotto. You don't see all the losers of lotto. You only see the rock and roll bands that get an album contract. You don't see the thousands and thousands that slave away late nights in pubs and so on. So my advice to people who plan on doing entrepreneuring as a career, and I think it's a great career, first of all, get as much experience as you can on someone else's dime. So ideally, find someone who will pay you to learn. And associated with that is stay on the cutting edge, because the new stuff always happens at the edges. My first career, I had a dozen careers, but one of those careers was building ski lifts. And when I first finished university as an engineer, I wrote computer programs to design ski lifts, and I worked for a ski lift company. After 3 years of that, part of that while I was going to school, I realized that there were only 3 companies doing ski lifts in the world. There was no way I was going to be able to start a ski lift company, and the industry wasn't going to grow very much because only so many new ski lifts would be built, only so many would get replaced. It was just not a good place for me to be. So you have to, so I moved, I left that job, not having any other job, and moved down to Silicon Valley, and for 6 months I was unemployed, looking around to be involved in the computer business and the personal computer business, because I realized that that's where the action was. So get the experience you can while someone else is paying, but make sure that you're moving into areas that are new areas, because that's where the new solutions will come from. And keep in mind that it's a long game. Try and build that network. Try and find people who you trust. I always say I'm looking for people who are honest, who work hard, and are smart, in that order. And those are the people that I can work with. If you can find those people and find a problem and apply your brains, that you know, you will get there.